Crypto investors beware. Change is coming to digital asset rules in the States, and countries elsewhere could soon follow suit. Welcome to the Daily Forkast, June the 8th, 2022. I'm Forkast's Joel Flynn with the latest on what's happening on the blockchain. All eyes, of course, are on a regulatory overhaul being considered by American politicians, so let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Regulation is key today. In the US, a bipartisan pair of senators have introduced a landmark crypto bill that could extend a comprehensive set of rules across digital assets in the country. But what does it mean for the sector, and could it set a precedent for others to follow? Forkast's Lachlan Keller has more.
Lawmakers around the world are moving from jawboning about crypto to working on enforceable legislation. The latest is the US, where on Tuesday Democratic Senator Kirsten Gillibrand and Republican Cynthia Lummis unveiled a bill being touted as the first bipartisan legislation on the industry. The Responsible Financial Innovation Act, also referred to as Lummis-Gillibrand, classifies these centralized cryptocurrencies as commodities, which puts them under the jurisdiction of the Commodity Futures Trading Commission and not the Securities and Exchange Commission, or SEC. However, the bill proposes that decentralized crypto assets that function similar to securities should still fall under the SEC. In a statement, Gillibrand emphasised that it is critical to integrate digital assets into existing law and to harness the efficiency and transparency of this asset class while addressing risk. Blockchain Association Executive Director Kirsten Smith welcomed this development, calling it a milestone moment for crypto policy. American businessman Andrew Yang spoke with our editor-in-chief Angie Lau, expressing his optimism over the bill.
When I talk to CEOs and builders and entrepreneurs here, what they really want is clarity. And so this is a first step towards clarity, that if you knew what you were faced with from a regulatory standpoint, then you could make better decisions and better investments. So I think this is an enormous step in that direction, and I hope the process unfolds quickly.
But not everyone is so impressed. Todd Phillips of the think tank Center for American Progress tweeted that the bill would weaken existing investor protections. For now, governments in many countries, including Japan, South Korea, India, and the Philippines, are pondering legislation that ranges from threatening to tax crypto out of existence, replacing it with government versions, or establishing a rules structure to work with private digital money. China, as we know, has banned it outright. Australian Senator Andrew Bragg told Forkast that crypto regulation is a race. He added that legislators can work with like-minded democracies to put in place policies and laws that promote investment and try and establish global standards. For Forkast, I'm Lachlan Keller.
Regulation is also in focus in India. The crypto industry there is bracing for a new tax on transactions, which is set to kick in on July 1st. Ahead of that, Forkast Pradipta Mukherjee sat down for an exclusive interview with the vice president of one of the country's largest crypto exchanges, WazirX.
In spite of having 15 million users, Rajagopal Menon expects WazirX's transaction volume to drop from the $45 billion it saw last financial year to just $20 billion this year, or even lower. While a lot of that may be attributed to the fall in crypto prices, the decision by Finance Minister Nirmala Sitharaman to tax crypto in more than one way is also having a chilling effect. A flat 30% tax on crypto income came into effect on April 1st, while a 1% tax deducted at source, which essentially enables the government to track crypto transactions, is due to begin July 1st. Menon says it's going to really hurt this year.
This year it's going to be very bad for us. It's going to be crypto winter. It won't kill, but it will definitely affect volumes of major exchanges in India. And it's got a lot of unintended consequences. If the intention is to track, I think you can do it with a nominal 0.01% or 0.1% TDS, which is what we've been asking for. Because a 1% TDS by the 300 transaction, it starts eating into your capital.
Menon claims that about 70% of Indian traders have either shut shop or moved to international exchanges since the 30% flat tax on crypto income kicked in April.
These guys, wherever you get the most favorable rules and regulations, you'll move there. So that's what they've done. So wherever it is possible, if it's taxed heavily in India, there's no point staying in India. They'll just move out. That's what's happening.
He also believes the taxes could prove to be the last straw for smaller exchanges that depend heavily on trade volumes.
a lot of them, if who don't have the staying power, might just simply fold if this goes on for a longer period of time, which is a shame actually, because innovation happens at the fringes. These guys are smaller, more nimbler. They go after audiences that might not be a priority for the larger exchanges.
However, while Menon expects a tough year ahead, he remains hopeful over the potential for change.
What does the government want? It wants to move 500 million people out of abject poverty, and if you can do that, you should use whatever tools that you can do to achieve that. And crypto is just one of the little tools that you can do to help a lot of people. And once the government realizes that and senses there are tangible benefits, we think that there will be more sensible regulation.
For Forkast, I am Pradeepta Mukherjee in Kolkata, India.
Meanwhile, life could be about to get a little easier for Singapore's crypto investors. Thanks to a move by trading platform ADDX, the firm has said it will recognize crypto assets as part of investors' individual portfolios. Those assets will be taken into account when allowing people to access complicated investment options. Only cryptocurrencies with higher market caps will be included though, and discounts will apply to valuations. ADDX, which is backed by the Singapore Exchange, claimed the move signals crypto's status as a mainstream asset class. Make sure you check out Forkast.News for more on ADDX and what's happening with crypto in Singapore. NFTs are back on display in Hong Kong at one of the city's largest exhibitions of local art. The Artiverse comes hot on the heels of Art Basel and a number of other shows combining artistic work with blockchain technology. With residents in the Fragrant Harbour seemingly spoiled for choice in the sector, let's chat more about the latest trends in the space. I'm joined by Yehuda Pecha, who's the NFT relations strategist at cross-chain NFT data tracker and aggregator CryptoSlam. Yehuda, great to see you again. Listen, when you look at exhibitions like these, and this one in particular, what exactly are you looking for? What catches your eye? Is it just artistic merit, or is it the tech as well?
Yeah, it can be, a little of both of those things, the merit, the tech that draw me to art. There's a lot of things that make these pieces stand out. It could be the entire composition. It could be how or what tech was used to create the work. It could be the story the piece tells, or it could just be the artist that I would like to support. Recently at Art Basel in Hong Kong, they had curated artists from the Tezos blockchain, and they delivered some of the most interesting generative arts we've seen in quite a while. Marcelo Soria Rodriguez, he made a fabulous piece that was inspired by his daughter's drawings, and it was a simple generative NFT that hopefully helped those new to generative art understand the generative art process. So we're just lucky to see these world-class artists being featured in Hong Kong.
Yeah, generative art in particular really seems to be driving innovation in this space. Why, in your opinion, is art such a natural fit for NFTs?
Yeah, it's because NFTs really do solve a problem for the artists and for the collectors. How can someone create or collect art and make a living off of it if it's nearly impossible to tell a copied piece of digital art from the original? They couldn't before. But with NFTs, that art can be instantly verified and tied back to a creator and made permanent. So this allows artists who maybe before were stuck designing graphics and logos for someone else, maybe even had a non-artistic career, now they can focus fully on creating their art and supporting themselves by selling it. Generative art, though, it's been around for decades, and now it's growing and evolving exponentially because NFTs have really opened the door for artists to thrive. They now have the financial freedom to create, and the more they create, the faster art and tech evolve. A real moment in art history is being captured on the blockchain now, and the story is going to be preserved forever.
And what are collectors looking at in terms of alternative chains, in particular like Tezos, given the relatively high cost of acquiring and minting, especially some of these generative pieces?
It definitely is, but besides Ethereum and Tezos, you're not going to find many robust art communities on other chains, and that's not to diminish the great art on Wax and on Polygon and on Solana. But what we're witnessing on Tezos is the chains it's establishing itself as the blockchain for art. Last year, when Ethereum's Art Blocks platform platform was booming, the Tezos art scene was just being born, and after the primary marketplace on Tezos called Hic Nunc was shut down by the founder, people realized their NFTs were safe, and they learned that the NFT tech really does preserve their art collection. So fast forward to today, and we're seeing Tezos art platforms like FX Hash and Object.com and Versum, they're exploding. And we're also seeing record-breaking art sales on those platforms. There was a $160,000 sale of X Copies Reachback just last week, and we're seeing daily sales of an artist like Zancan, his Lush Temples or Garden Monoliths, because people trust the Tezos blockchain now. And at this point, I think it's just a matter of time till we see our first seven-figure sale on Tezos.
And just quickly at the end, I want to ask you, Artivus Chief Marketing Officer Daniel Chang has described Hong Kong now as a central hub of the international art technology market. Is that a sentiment that you would agree with? And if so, how exactly do you explain it?
Yeah, Daniel's right on. Hong Kong is one of, if not the art capital of the world, and they've been that for years. They even featured some of Tezos' hottest crypto artists years before NFTs became mainstream. Glitch artists like Hater Rocket, he's been featured at galleries and events in Hong Kong going back to 2016 and before. So them being ahead of the curve when it comes to crypto art as a whole and now generative art, it's not a surprise. I'm not quite sure how to explain it though. So maybe like grunge rock in the 90s had a home in Seattle, Washington, Hong Kong has sort of been the epicenter for digital art. And I hope the world is taking notice of what's going on. My gut, though, it tells me that this is the start of an art renaissance, and I think this is history in the making.
All right, Yehuda, thank you so much for talking to us today. That is Yehuda Pecha from Crypto Slam.
Yeah, thanks so much.
And that is the Daily Forecast from today. From Asia to the world, there is, of course, much more about the latest on the blockchain at Forkast.News. Do follow our Twitter as well, at Forkast_News. Until next time, I'm Forkast's Joel Flynn. See you then.